Welcome to Keiser Voices, the story of success, brought to you by Keiser University Graduate School, here where the academic world meets personal triumph. Join us today as we dive into the captivating tales of success.
Good day, everybody. Today, I am Professor Cossio with Keiser University, proud professor in the university. And what we're going to talk about today is Fintech. The tools of Fintech, how it helps businesses, how it helps banking, how it's permeating right now everything that we do. Right now, it's just about everywhere. And the funny thing is that it hasn't started that long ago. Everybody say, oh my God, no. This is a new technology. It's practically, I call it a baby right now. But you're going to see how it changes over time. And this is not something for experts. This is something for the common person. Just the same thing as when you first got your first smartphone back in, and never forget, somebody gave me my first iPhone, a business partner of mine in 2007. And I looked at it and said, where are the buttons? I didn't know what was going on. He said, you'll figure it out. And he left the office. I'm, oh my God. And now I'm an expert in that thing. I got apps in there and download it. That's what's going to happen. That was what? 2007? That's 17 years ago. This is what's going to happen over the next 10 years, 17 years. Things are going to get easier, smoother, more user-friendly. You're going to see. So the question is, where are we right now? Okay, that's the first thing, because we have different questions. The question that we're going to address today is, the first thing is that where's the current status of the fintech and business and banking status? Okay, and the first thing we're gonna address. Then after then, I wanna talk about some of these things because what fintech is doing is coming into an established industry and offering new solutions. And a lot of time when you come into a new industry and say, well, let's do this a little bit different, people are going to say, well, I don't know, I was pretty happy doing it this way. Well, there are some realities that I'm going to talk about. By the way, I'm a financial economist by training, so I always think in terms of macroeconomic trends and also costing things and trends for individual businesses. So this all starts there, because if you have solutions to no problems, who cares? But this is fintech. It's actually a solution to a very real problem that we're going through right now in our economy and in the world in general. Because we're going to do that first. Then we're going to look at the fintech as a disruptive force. Very important. It's very interesting because as an economist, I remember Joseph Schumpeter, the great economist, saying, "See, that's what you do. You in order to come in with a new solution, that means that the old solution is getting broken. It's not working as good. So that's the thing. So we're going to talk about disruptions of that. Then we're going to talk about, okay, so if we have these fintech startups and all these new companies starting up and all that kind of stuff, are they going to provide the solutions for a larger economy and all that? There's a name for that in economics. It's called scalability. In other words, can it get bigger? Then we're going to address that. I have some suggestions with that. Somewhere in there, I mean, I'm already told you a little bit about me, but I'll tell you a little more. And at the end, we'll end today by talking about what's going to happen in the future, or what we think, at least from my standpoint. And of course, I don't get everything out of my head. Everything that you see inside my head is because I read, I research, I do things. Okay, and you can always get in touch with me somehow through the school, and I'll be able to send you some resources. I mean, the references or whatnot. Hopefully, this is something you really like, and you will begin to navigate towards these waters. All right, let's get started. All right. So each one of these four areas practically will take about less than 10 minutes. It's not that long, but it's pretty close. So the first thing and all that is that how come it's so important now? Okay, in the Asia Pacific, it's like it was as high as 52 billion spent. I'm talking about the last four years per year, 52 billion. In Europe, in Europe, the Middle East, and in Africa, also about the same, 49 billion. Now it's slow down a little bit because in 2023 we had a little bit of a slowdown in the economy in general. That was due to inflation, in high interest rates. Remember, I'm talking like an economist already. High interest rates and things like that. The U.S. has 2/3 of the total fintech applications and market, probably close to, I don't know how long have we by now, but it's inching and approaching 75 billion plus, close to 100. Okay, so the most important uses right now of it are what? Well, payments is used for the most part for payments. It's used for payments. Artificial intelligence also for payments, creating payments solutions and payment platforms. There's also property technology. In other words, it's also used for property, real estate and stuff like that. One of the things that we have in fintech is called smart contracts. So you don't have to grab your paper, go in there, take a picture of your acre of land, go to the uptown. That's you may have to do something depending on where the title to the piece of land is. But fintech and all of that really circumvents that. You don't have to worry about that, because ultimately, if you can do it all through digital, you can do it all that, then of course there's a security and all the bells and whistles that you have to go, the certification, the authorization. You already know, because some of the things that you do, don't you have to go in and put your certificates, the double entry and all this kind of stuff. All of these securities are present in all the things I'm talking to you about. Okay, so yep, that's what that prop tech, that's the property technology. Also, another use that is already being done is in insurance. And when you don't have that much paperwork and all that kind of stuff and having to drive and all that, the cost of the contract is down, which means that more people can get insured. And you don't need to get big insurance. You can do what is called, is a new thing that is called micro insurance, together with something called micro lending. In some of the African countries, you can use the fintech technology and the smart contract to do something called micro lending. As a matter of fact, the Nobel Prize in Economics was actually won, I think, 8, 9, 10 years ago, by an economist that figured out when and did that. Micro lending is when somebody just, for example, if you have a couple of people who have a little shoe factory somewhere in Namibia, and they get a micro loan for like $3,000 or $4,000. Think about that. Something so you can reach a lot of things. Okay, now the thing is that in essence, what fintech is doing is transforming the banking industry. That's what's happening right now. Okay, and why is all of that happen? Because they're transforming it. That's a reality. The banks' cost is going up. Interest rates are getting our interest rate costs are getting higher. So they try to do things more cheaply to save money. Okay, so they're quickly adopting digital technology, just like the rest of us are. So the banking industry is doing that. It's adopting all of that. And then the other thing that is important, and the banks don't want to be left behind, is the whole idea of e-commerce. I don't know how many sites I use. I don't know, but everybody uses Amazon and the this and the movie website and all these things. And all of these things, when you do that and you pay for that and you put your card in there, your debit card or whatever, you're going to the bank. So the banks know this and they get smart. And so everybody's already using this, but at a very rudimentary level. It's not as big as we think. It's not as much all over. It's not that, but smart banks are doing that. Okay, and there are online banks who don't have to worry about paying for the building. So they are actually more competitive, if you can imagine that. Okay, so what things are there? Okay, what things are there with all this new backing and adoption of the digital technology and all kinds of things like that? What we have is other things that banks are doing. The last time I walked into my bank, I don't really walk in there. It's only 2 blocks away from my office. And I go in there, and the people know me because some of them have been my students because they all go to schools near here. And the professor, where have you been? And I was like, well, I do everything online. I said, from time to time, we see you to the drive-through in the bank. Yeah. I do that sometimes and all of that. But basically, what are you guys doing? You see, in the late 1990s, early 1990s, late 1980s, the regulations for advising out of a bank, you could not go to a bank and ask for investment advice 30 years ago. You could not do that. You had to go to an investment advice or somebody, somebody brokerage, somebody had. Now those people, banks actually hire those people and have them in there. So the banks have to do that. And in order to save money and do more things, they use now more and more something called the robo advisors. In other words, maybe you have an advisor in there, and that person can handle maybe 100 clients in a week, or maybe 40, 50 or something like that. Well, if he puts some of, so if he robotizes some of the stuff that she does, she can get more clients. That's just one thought. This is what's happening, slowly but surely. Okay, that's what people like. So and then people go to the bank and use the bank for many different things. What do we call that? That's banking as a service. BaaS. We got a whole acronym for everything. So that's really interesting. So that's what's happening right now. Okay, and this in the United States, that is really, to save money. Can you imagine how much you need to save money in the developing economy? I mean, you put a bank in there, my God, how many people come through and all that. So this is very important when it comes to a developing economy. Okay, the key to make money with the banking, okay, is to do cost management. Cost management is the key, and the fictive solutions allow the banks to do that cost management. Okay, very important. So the banks can do many things in there through the fintech. Okay, they can do digital banking, they can raise capital, they can use the lending, like I told you, they can do different payments, as well as the property and the insurance things I just mentioned a little bit ago. They can do the e-commerce solutions, and then they can do something besides the banking as a service. There is something else going on, something that I'm going to mention all kinds of stuff you may or may not have heard of here, but there's something they call embedded payments, embedded banking. What does that mean? That the bank, for example, can have a client who's a big business, or a regular business, small, medium enterprise, SME, a small business, a medium business. And people who deal with that business do it digitally. In other words, they don't go to the bank. They may not even use the credit card, the debit card or whatever. They deal with that business. But they use the money that they have in the bank. So in essence, and I saw this many, many years ago. It's different. Went to when it was in North Carolina, I went to a regular grocery store, and there was a little bank booth in the middle of the grocery store with a person sitting there. In essence, that's what we've done digitally with embedded banking. You can have actually somebody virtually inside the business, but represented the bank. In other words, when you open the website, you look at all the choices, and it says embedded banking. Oh, you click there, and he says, what would you like to do? I want to do some banking, but I want to do it through that business. It's unbelievable. It's just like everything, the lines blur, but the payments are clear, the security is clear, the user interface is clear. That's what's important. We are now at the point to where, and as we're going to talk a little bit later, as we discuss, we're going to discuss disruptions and then scalability. But right now, I'm telling you that these things are already there. You see, and they're already being used, however rudimentary. Some things give us limitations, such as security, and then not everybody likes to do these things right away. So the other thing is to really, who is using all these things right now? And some of you who are smart marketing people, you're going to know what I'm about to say. It's a kind of person we call the early adopter. The early adopter is that person. It's like when you have all your friends and you're going to go swim at the rock quarry or whatever. Who's the early adopter? That's your friend, the first one who jumps in the water. That's the early adopter. So that person jumps in the water, finds, hey, it's good, it's cool. Anyway, so that's what's going on. So all these fintechs, especially the ones who are starting up, need to go grab those people and then provide a solution, learn also, get feedback as to what works, what doesn't work, especially when it comes to security, user interface, and all kinds of stuff like that. Okay. If we do this correctly and we're able to go in there, in essence, what we're gonna do, we're gonna get people who are ready to use the fintech solutions, and we're gonna be able to like robot advisors or things like that. And ultimately, if we go through the developing nations and things like that, we're gonna be able to roll in all the people who we call the underbanked, the people who don't use them as much. Why? Because they may be in a little village, and the next bank. I mean, that even happens to some friends in the U.S. Some old-fashioned friends that I have. Well, I have to drive to the bank, and that's like 40 minutes or 30 minutes, and all that. And I try to tell this friend of mine, she's smart. I said, listen, I'm going to teach you exactly what you need to do. So we're going to roll more people into that. Very, very important. Okay. So fintech in the last I guess since it started and all that, I think probably 10 years or more, we've been getting to it and all that. We have innovations that we use, innovations such as the blockchain, and we'll talk about it in a minute. We're not going to talk about all these things, but these are all the new terms that you will listen to. You will hear as you begin to learn more about this area of business, banking, and technology, artificial intelligence, peer-to-peer networks, what they call contactless payments, where you don't have to touch anybody. You don't touch no money, no cash, no banks, no nothing. Okay, the digital banking, they can do asset management to your investment. Okay, you can have something called a digi wallet, where all your digital money is sitting around there. And people can do open banking where you don't have to, where you actually do banking with a business all there, and you can see everything. And why is it that you can see everything? And why is it that you can involve a third party other than you and the bank? Because of security and user interface. So you see already, and since fintech just got started, all those tools are not 100% perfect. They're good enough, but we want to get them to the point that anybody, anywhere in the world, you could be in a safari trip, or you could be in Asia surfing, and then you get off, you got to Cabana, and you grab your cell phone and do a transaction all the way in the US, buying something for France, sending. I mean, that's what we're gonna get to. And then all of it is in there. What else are we gonna do? We also have to think about the Internet of Things, very important. Then all of these things are gonna create an immense amount of data, which is fabulous. How do you think artificial intelligence works? So it's some smart gnome in a little cave? No. Artificial intelligence is nothing but analyzing all that data and coming up with solutions of things we learn from the data that it would take a human being too long to learn. But the computer's a lot faster. I'm not sure if computers are more intelligent, but it's just heck faster. Think about that. But that's the important thing. You see, then we can do something called alternative credit scoring, which means what? You can have immediate credit. If you begin to do transactions and all that, your credit can be improving. You can see it. As a matter of fact, I already see things that happen in my life because I deal with two or three of the applications for fintech, and I realize I did this transaction, and then I go check. I go check. I'm sitting my computer all day long. I'm an online professor, so I look at these things. It's unbelievable. It's amazing. My score went up, and then I go check. I know what. So guess what? It's not your credit scoring. Not something that you look at every 2, 3, 4 months, and then you wonder, why did I do? Why did it go up? Why did it go down? Not anymore. It's almost like playing an instrument by ear. You get good at it. Okay, so that's other things we were talking about. Of course, is that we can do trading, stock trading, investment trading, using that, and ultimately, if you happen to work at doing that, you see, you are the advisor to the student. You can use a chatbot. We can use a virtual assistant. Imagine that. Virtual assistants is like just fabulous, and that's what we are right now. Okay, so that's what we are right now. Very, very straightforward, very easy to understand, and all of that. And what now we're gonna move on to thinking. Okay, so what is it that we're looking at? What happened? in the banking and business industry and all that. What we had is that we had people trying to solve the problems of things getting too costly. So maybe we can use a digital solution to the costliness. And Fintech began to have solutions that traditional banking would have been too expensive today. That's what happens all the time. People say, but why did we use the steam engine? I mean, we had nice, beautiful sails, and the steam engine is not. Yeah, but to go across the Atlantic, it took a month and a half, 2 months. In a steamboat, it took almost nothing. And finally, in the 1930s, there were transatlantic flights. So all of these things, this is the same thing as that. So I don't want you to think of this as some weird black box that nobody understands. No, this is a solution to people's thing. And the most important thing that people have is time. That's the only, as an economist, I always tell people, your time is the only truly depletable resource. You don't get it back. You can get the money back. Somebody can steal your money. He always says the best revenge is making more money. You just, hey, that's it. But when it comes to time, it's more important. And time is money in economics and finance, as you well know already. So that's the thing. So what are we doing? What is the number one, and since we're dealing with people, the number one disruption, and it isn't really a disruption, but it's really the number one thing that we needed to improve upon more than anything else was customer focus. The banks needed to be customer-centric. Okay? That's it. Why? Because when we look at the banks, they were not making no money, and they were competing with each other. So the disruptions had to be based on market share, margins, the security, okay, the information, the data, the privacy, all of these things. We got to improve all these things to give the customer a better experience. That's it. So the customer needed to do something, but I had to wait until Friday afternoon that they don't work to drive to the bank. No, they can do it right away. And they don't have to dial the phone and talk to somebody and all that. No. We're going to disrupt all that. And we're going to have a customer-centric solution, you see, to do that. So the specific solutions had to do with peer-to-peer, in other words, person to person, and sometimes there's even a private solution to actually have peer-to-peer lending. Look at the crowdfunding and all these things. Some of them go through banks, some of them go through private. Think about that. How we have, I mean, you turn on the internet, you turn on the television, whatever you use that your communication method is, and you see all these tools being used, and they're second nature to you already. But all these things are disrupting the old order. And they're working. The other thing is personal financial tools. When I teach investments and things to my students, and I say, you know what, you don't have to kill them. I'm going to wait to I'm going to go talk to my broker or whatever. Hey, listen, you can actually download these tools and learn how to do the broker thing yourself. Yeah, but I don't know about stocks. You can learn that too. I'm teaching you in the class. And I'm not saying you don't need a broker, you don't need an expert, and sometimes you do, but they don't have to be as active. And if they're not as active on your behalf, it won't cost as much. Think about that for a minute. So you can have personal financial tool, peer-to-peers, okay? And also, who are these people, and how do you do these things? And if you're going to disrupt, maybe somebody invents a financial tech tool, and they become a fintech startup. How can they become successful while at the same time disrupting the current order? And if you're going to disrupt these banks, are you going to end up competing with the banks? And then the banks say, "Man, we're not going to give you information because you're going to compete against us." Not really. A lot of people don't understand that actually that disruption that people talk about and how a fintech startup or somebody like that can actually be an agent of disruption to the industry and still be successful. And one of the answers is actually to collaborate with the banks. In other words, to come up with like a joint venture or something of the sort, and the banks being smart is a lot better than trying to compete and all that, because the banks are just way too big right now. The if you can think about it, the size of the banks, I mean, the amount of I would say the volume of activity and all that still is preponderant the banking. Now, never mind that most people use the website to look at the bank and all that, but that's not exactly fintech. I mean, I go to my website and see how much my account is and all that, and do that, and then if I go shop for something, I use my credit card, my debit card, and then the next thing I know, the next day in the morning, there it is in my bank. So that's not really a fintech function. I'm just using the website like instead of driving to the bank. What I'm saying is that the banks are going to provide the fintech solutions to people, and fintech people are going to work with the banks. Pretty awesome. Okay. So these startups and these fintechs are going to be allied with the banks. Okay. And that's going to be not the easiest thing in the world. And the reason I'm saying that is because that's another thing that I do also. Is I do mergers and things like that. And they say, will these two companies, when they get together, will they be able to work together? I mean, what's going on in there? And the answer is, I don't know. I mean, sometimes they do, sometimes they don't. What's important in there? What are the differences? The difference in management and culture. A fintech is run like a fast running train and all of that. I mean, fast running airplane or things like that. And a bank is more old fashioned. I mean, they don't mind changing, and of course, it's going to it's going to make it more profitable and less costly. But they want to change at their own pace, and the market is not going to wait for them. The market is going to take off. So the smart banks are the ones who are going to adopt this new technology. Exactly. You see, they're going to adapt their technology management and culture. They're going to learn from the fintechs, and the fintechs are going to be able to learn the needs of the bank and their customers. The other thing that you compare the two organizations is in IT. How do they deal with IT data? Data IT comparability. How are they? What about the knowledge? Who knows what? I mean, you have a tech person who has her own fintech startup, and she's put it all together and all that. Then he grabs her chief investment officer and her accountant, and they're gonna go to the bank to try to do a deal, to try to do a contract and all that. I just start describing the project and all that, and that may blow away the banker who says, "What?" You see? So you have two different organizations type, but that's all going to be resolved because in time they're going to learn from each other. And so just like we did, learn everything that we did over time and things like that. So the knowledge is going to be spread out. Okay, that's what the skills are going to be spread out. The operations are going to get smoothed out. Okay, and you're going to have and you're going to have a business model that includes both of them in some kind of symbiotical relationship. Some people don't believe that, and there are some fintech applications that will not have to do with the bank. Some of them will actually replace the bank. Those are different ones. All kinds of stuff like that. And then who has the money to invest? And that's important. The banks have the money. The fintech startups have to find the money. So that's another thing we can talk about. So anyway, so that's what the deal is when it comes to all of that and the important thing about the disruption and all that. So if we look at the market, where are the disruptions? What are the targets for disruptions? The target for disruptions are payments, industry, different segments of the industry, the insurance industry I talked about before, small business firms, how they run. You see, the SMEs and the small firms, they're not all, I mean, they use the bank like I use my bank, but maybe they can benefit more from a fintech application. How about that? And get the customers to use more e-commerce. You see what I mean? So that's what we did. We talked about that. And then the alternative quick credit. The smaller companies can get the clients to use the fintech, so the clients know more about the credit, so they can use it more. They don't wait so long until they do a big purchase. They have it right there. They are ready for that. Okay? It's very important. And then they create data. Even small companies create data. Now, when you create data and you analyze that data, that's worth something. Okay, we call that data analytics. and that's what really it does. And most of them put them up in the cloud and all that. Okay, so we know that about all the sectors that are disrupted and all that. So yes, can fintech disrupt banking? You better believe it. Okay, as a matter of fact, the fintech can create something called neobanks. Okay, they're more cyber oriented, that they're more investment oriented. Of course, they have more cybersecurity issues contend with. They use a digital platform, so people have the option. You go traditional, or you go fintech, and all that. That's very, very important to understand that. And again, all of the fintechs will use the AI, the machine learning, okay, and the robot advisors, the simple. So in other words, all of this started with an ATM. Forget about it. That's years and years and years ago. Okay, an important thing is, like I said, the first driver of the disruption is the fact that everybody has to become more customer focused. Okay, that's it. And understand that whatever they do, whether they're a fintech firm or a bank, they have to become more branding conscious. Okay, and the fintech innovations that help them right away are what? The alternative credit, the chatbot, okay, which is something that can, like a virtual assistant to the banking person or the fintech person, and then use a payment gateway, a way to pay more efficiently, less costly, and all that. So the question is, and look at these things, will that replace the banks? Some people believe in all that. Okay, we have all kinds of different disruptions that we can look at. We talked about that. Okay, I mean, all of these things in the world now, we have business models that continue to adapt to the new realities and all of that. We have something called green finance, that people that are aware of there are carbon credits that people do that, and people use them for as tax reductions or monies in certain countries. I'm talking globally now, okay? And then we have that. We have some disruption called BNPL, buy now pay later. So we used to have that. Your grandmother had that layaway. It was called layaway. Yeah, but you can buy now and pay later, or actually you can save money, pay, and then take it later. I mean, they have all kinds. This is things that people have been doing on their own for a while. We just digitized them. So there's many other ideas that you can think about. Oh, why don't we do this? But guess what? Go through some research. Maybe nobody has done it yet. There you go. You can be your own fintech new startup for something. Okay, so you drive your transactions, all kinds of stuff like that. And then another driver of transaction is interesting. I have to mention this disruptor is something called the gig economy. A lot of young people, they're gonna get a job, and so they go put the resume, they get hired and all the kind of crazy stuff, and doing that, and okay, I'll be here Monday morning at 8 o'clock. No, a lot of people are making money by doing jobs for. It's just like the young person going to mow some lawns and doing that. They're doing that in the e-world. You see, so you have a gig. In other words, okay, maybe on the weekends. In the weekends, you play guitar in some place, and you make some money doing that. During the week, you teach guitar, and you're also an elementary school teacher at the same time, and something. So you got 3 or 4 or 5 different ways that your money comes in, and it's all a little bit here, a little bit. That's what we call the gig economy, and fintech is perfect for that, because you can put it all together like that. You see, and also that gets to the whole idea of how you're going to do your taxes when you do that. And yes, digitax can help you with that. Imagine that. So all of it gets digitized in some way. Okay, and what happened? We're talking about that. This is what the banks are doing. The banks are understanding these disruptions. So you're either going to join them and do something, or who knows what's going to happen. Okay. Another things that the bank can offer: e-wallets, mobile banking, okay, and all that. We talked about that, and I discussed it in terms of the disruptions. And the interesting point here is that we have startups that are going to be entering. They're not even ready yet with new solutions and all that. So it's good for everybody to begin to track down the fintech companies and all that, all the new things, the fintech industry. It's very, very important. Okay, so the fintechs are right now the generative force for the disruption for the bank. But the reasons why the bank were going to be disrupted either way is because of the higher costs. They were not customer centric enough. People had to drive their ass, not okay. And eventually they had to all not just the banks, but the investment firms, they have to be able to lower the cost and be able to service more customers with the same amount of labor force. And that's done through robo advisors and things of the sort. Okay. So anyway, so that's what the disruption. So the disruption is almost like one way or the other. It was going to happen no matter what. You see. So we have all these new startups in fintech starting up. But the question is, are all these startups going to be okay? And what strategies can these startups have to actually be successful, not just with the bank in the same town where the startup is, or somewhere in the U.S. or maybe in California or somewhere in the region and all that, but just in general and globally. What does a smart startup do to succeed and all that? And the answers are actually, and then continue to grow and get bigger and get more customers and all that. And the answers are very, very, very straightforward. And they're really not more different than a good marketing person would tell you. I mean, I'm going to say some things that a good marketing person. Oh, I remember that from a class. You leverage your partnership with the financial institutions. Oh, in other words, getting partnered with the financial institution. That's already told you. The banks have to do that with the fintech. But guess what? The fintech startup have to do that with the banks and any other financial institution they deal with. Okay. Then when they provide if you're going to try to provide a solution and then get bigger, you don't want to get bigger all of a sudden. You're gonna get bigger at a pace that allows you to learn from the feedback that you get. So the most important thing is to design this is a strategy to be able to scale, is to design the correct application programming interface. Yeah, it's called API. It's so funny, but I love acronyms. Everything is an acronym. Okay, if you do that, okay, you're gonna be able to be efficient. Okay, the interface is gonna actually get you more business throughput, which is it's like a flow of water through a pipe. You're gonna get more. You're gonna be customer focused. You're gonna learn from that, from all the feedback that you get, and it's gonna be efficiently scalable to grow. The other thing that's important is find a way to be compliant with the regulations. You have to. You're not going to be a fintech and grow if one of these you have to get. I don't care. Get the correct lawyers. Get the correct labor force. Get somebody who knows about compliance. Get a consultant. Outsource if you have to. That's another thing. If you have to outsource, if you don't have all the skills, you don't have to. But you definitely have to go find them. Okay. So you in order and then see, and then you begin to build the data that you get as you begin to grow and your business begin to scale bigger and bigger. You get the data. And remember, don't try to do 10 different applications. Concentrate on one segment, get bigger with the data, get feedback from the data and use that data and that feedback, because you got not clients and customers. You can have a group that you can interact with, get feedback, send the interviews and the questionnaires and get the feedback. Use that feedback to continue to develop and grow correctly. And that's how you can expand and handle increased loads of business. So it's very important to learn how to scale your fintech startup. Okay, and of course, in order to be successful, you got to have the right funding. Okay, you have to have the infrastructure, the right technology infrastructure. You have to have everything. Okay, you also have to know how to do customer acquisition and retention. Very, very important. Okay, and find a way to get the early adopters to begin to become your customers. Give them incentives. Set up a loyalty group. We used to call them affinity groups, like in affinity groups, people who like the same thing. Now, you don't have to have them like the same thing. They're your customers. They're your early customers, and then find why they buy those things, and then scale that into the people who are not the early adopters in the second stage of the development of your firm. Okay, so anyway, so you do that, and it's interesting, and then you make sure, okay, you have the correct authorizations to come in, very secure. And finally, well, not finally, but what is important, and security and all that. What I'm saying is that you need to come up with a customer relations management (CRM), customer relations management process. You're not going to get bigger if you don't manage a customer you have. Costs a lot of money to get a customer. Costs more money to get him at the beginning than to retain him. But the retention is very important with loyalty and feedback and all kinds of stuff like that. Also, I mean, I've found some things also. Some things, we can talk about how to scale internationally. A little bit more difficult, but you can do that too. You can go international, global, and do that. You do the same acquisition, retention of customers. Okay, you give them what we call. Sometimes I go to conferences and they give me badges, customer a loyalty stickers or something like that. They're not physical anymore. They are, that's right, digital. Everything is digital, and then as you scale internationally, it's very important because you go into other economies, and the things in other economies is that you have inclusivity. In other words, you're going to actually reach people who are underfunded. I mean, who are underserved in small villages or something like that. And that's what this is the good, in my view, this is the good social positive outcome. When you look at all the people who are already into banking and fintech, there's a small population in the whole world. It's an unexplored that, and that's what we'll do in the next few years. So this is going to get larger and bigger. Okay, and the best and the good way to do this in a non-expensive way is to use robotics to reach people, even for marketing. Okay, create the data, do the data analytics, use robotic process automation, RPA, another acronym. Absolutely. So you can actually do that automation of many of the functions that you do. So it doesn't have to be just the function just for finance or the marketing. You can do many different other things. But always remember, all of these will work when you reach your customers, as long as you have a good, easy to use user interface. It all comes at the end with customer focus. If you do that, then you're going to be just fine, and yes, all these things are going to be successful, and all of that. All right. So anyway, and you automate a lot of the functions of your startup. You scale the growth. You're going to scale the growth gains. And one way to do it, if you're small and you don't have all the skills, again, let me reiterate, you do outsourcing. Okay. Don't forget, use the RPA, robotic process automation, okay, because it increases your productivity. Okay, use AI and machine learning to boost automation. Go to the cloud because that's probably less expensive than anywhere else. Okay, and use the blockchain because it's very secure when you're dealing with people and what they need and the connections, the process. The blockchain, we're talking about the ultimate. This is why all these technologies are good, because it's decentralized. You don't need somebody to check it. It's okay. Okay, it's important to scale in emerging markets. Okay, so we have what? Important, again, same offerings of real-time credit, okay, of using a chatbot to reach them, to automate the interface, so we can offer things lower cost, okay, and to partnership and support with the larger institutions, so it's easier. All right, this is good. See, we began by seeing how the market was, then we proceeded, okay, to do what the disruptions are that the banking industry faces, and that the fintech solutions are not necessarily somebody's going to kick them out. Some people believe at the end you will only have fintech and no cashless society. I'm not a clairvoyant, but I tell you, it's moving that way. Okay, and not only is it moving that way, but interestingly, it's providing the solution. The bankers, the banking institutions that are smart will bring in the fintechs and begin. In other words, hey, a long time ago, you used to go to the store and rent your tape and to watch the movie. Hello, what happened to those people? So the beautiful thing about the economy. So the beautiful thing about the market is that the market will find the solution at the end, and either you participate with it or you're out. It's you're in or you're out. Now, the last thing we're going to talk about today. Give me about 5 minutes and I'll wrap it up. And thank you very much for coming here. Listen to me. There is the opportunities and challenge in the future. Okay, and the trends in fintech, and this is so. What are we gonna? What? And that's part of me. Part of what I read all the time. These things don't come out of my head. I mean, this is what I surmise. Okay, in other words, all the things I'm doing this every day. Okay, so what are we gonna have? What are we gonna do? There's gonna be more fintech use. I tell you that. And when you don't have the time to do all the things that you need to do, the fintech plugs the holes. So at the end, you have a more stable relationship with your money, a more stable relationship with your advancement in your career or whatever it is that you're doing. Okay, all these new ways of paying things will become normalized. I remember I was a kid, I had to dial the phone. Yeah, I'm that old. I was a kid. Then you would beep, 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 beep. Then everything is to the smartphone. Everything we all learn. I have a very elderly mother who I bought her iPhone years ago. If you take it away from her, she'll chase it down the street. I'm saying that all this becomes second nature. You will have a credit score alternative that gives you'll get used to having your credit score every day. You wake up in the morning and all that. You take your blood pressure, maybe you this, that, you take your medicine that the doctor gave you, and then you check your credit score. That's the future. You'll have when you're dealing with a vendor, something you're trying to buy, you don't need to, okay, let me go to my bank and transfer the money. No. That vendor has the bank embedded in there already. You will have verification solutions that you don't have to get in another website to go this. I mean, once you're in and you can talk and they all connected. That's right. It's not like the Internet of Things where your refrigerator knows what your toaster is thinking. It's not like that. Okay. But it's something like that, but it's all you. So when you come in, you're authenticated, you got that, that's what's gonna happen. And it's gonna be so easy. At the end, it's going to be an application like many years ago. How do I use this app? Do I have to download it? Not anymore. Boom, the verification. You will have more loans, more lending, more things, more accessibility. The whole thing about the crowdfunding and all, more accessibility. Revolutionizing money management, how people do it individually. Okay, you still have a broker, but you just do everything. Trading security, your investments. Some people believe that over time, then people won't use as much crypto because sometimes they use it as an investment. Some people use it as if gold and all that. So I'm not sure all about crypto. I don't know for sure that people will use more investments. Okay, so when you're thinking on your own about the trends and what's going to happen in the future, think about this. You have to think about demographics, who's getting older, where are the people in the world, what performance do you need from your institution, from your funds, from your money, from your work? What are the growth factors that are going to influence all of these things? What are the regulations? What do you think? More regulations, less regulations? How people perceive regulations? How are you going to engage with your customers? And if you're a customer, how are you going to engage with the institution? To me, an interface, maybe to your phone. Who knows? I'm not sure that. And the question is, are all of these things going to be coordinated through our social media activities? Would that be just easier? Think about this for a minute. Because a lot of people, I'm not, but a lot of people, I'm on my laptop, my computer all the time. So maybe that's what my interface is going to be. If I'm on my smartphone, that's what they say it's going to be. You see what you see what I mean? Some people, it depends on what your interface is going to be. You're going to have completely interchangeable access points, user interface, some to social activity. We're going to help underserved markets. All these people got to roll them into the economy. That's what's going to make. I mean, people think, "Oh my God, poverty." Roll them in. You see, all of these things, insurances, cross-border transfers of money across the world. If you think about everybody, think about, oh my God, the borders and all that. I think of economic borders. Okay, and all of those things are what's going to happen in the next decade. All these things, and you're going to have e-commerce, more payment, mobile wallets. You see, buy now, pay later. My goodness, everything is going to be fintech. It's just begun. We're going to have global financial inclusion. Everybody needs to roll in. That's what we're going to have the world together. Okay, you're going to have traders who don't need to know everything about finance. Some people call it amateur trading. Well, who cares? Everybody needs to learn about that. We have loyalty programs, groups of people who use these things. By 2030, people say most of these things will be done through social media. Maybe yes, maybe not. Maybe it'll be done through my cell phone. I don't use social media much. Okay, but we're already there. And we don't have to reinvent the wheel. All of these things will be done naturally, and people will choose. I always make this is the last thing I'm going to tell you. I always make this is why this is decentralized, and blockchain, for example, works beautiful. I'm going to tell you how that works. Decentralized, and people say, how can you have something decentralized? So don't you need a centralized? No, you don't need that. No, this is a solution that the people want. And my ultimate example of that, and with that is the last thing I'll tell you today, I always tell people, was there a commission or a centralized place where people decided what words to use in the language? In Spanish, English, Swahili, Greek, Quechua? And the answer is no. The language is something that developed organically through people's utilizations and all that. And it is my view that that's how this is going to end up being. The fintech application, global application, and the application to all of it will end up being a language that 40 years from now, nobody will even think about it. It'll be second nature. And the people, that's how we will develop through people's needs. Thank you very much for listening to me today. God bless you. Take care. See you next time. Bye-bye.
Thank you for journeying with us today on Keiser Voices, the Story of Success. As we close this chapter, remember, every story has its next page.